Good evening, friends. Welcome to our YouTube channel, Evergreen Stock Market. Friends, today Indian share markets has resembled a bloodbath. Sensex has fallen by 2000 points and Nifty has fallen by 566 points. Except Nifty Pharma, all other sectorial indices are in red. Many would have already known about the reason behind this fall, but there are some other reasons which added fuel to this fire. Today, I'm going to discuss all the reasons behind this fall. These are the reasons which, along with trade war tension, there are four more reasons behind this huge fall. Let's discuss everything in detail in this video. The first one is extension of lockdown. The lockdown has been extended from May 3rd to May 17th. As of now, the coronavirus cases are increasing very rapidly. So, we are not even sure whether the lockdown will end by May 17th or not. Even though the government allowed some zones to reopen the shops and all, but the major cities are still under lockdown. These are the 10 top cities which help for the Indian economy. Except Visakhapatnam, the remaining 9 cities are the red zones. That means the companies are totally in lockdown or operating partially in these cities. Second one is growth numbers. If you see this picture, this is the March month core sector data. These are the values of March month compared to the previous month. Except coal, all other sectors are having negative growth. In March, we are only having partial lockdown. But from April onwards, we have full lockdown. That means the future sector data will be in more like negative compared to March month. Next one is auto sales. This is the auto sales data for the month of April. If you see here, Maruti Suzuki reported zero domestic sales against 1.3 lakh in April 2019. That means last year it sold 1.3 lakh units in April 2019 and this month it's zero. It didn't sold even a single unit in the month of April. Even also reported zero domestic sales. Even the other companies like Escorts, Volvo, Royal Enfield sold few units. Those are almost negligible compared to their data for the same month in previous year. They even exported few units, but those are also negligible. In my opinion, we may expect the same data for May month as well because of the lockdown extension. Because people won't show that much interest in auto sales when they were in lockdown. They will try to save and they will spend only for their minimum needs. That's why this also played a major factor in today's market fall. Next one I want to discuss is weak earnings. That means weak quarterly results. After previous market closure, some companies like Reliance Industries, Hindustan Unilever Limited, Tech Mahindra, and some other small companies reported their quarterly results. Those are very weak earnings, and those results are for previous quarter. That means up to March. In March, we have only partial lockdown. If we are getting weak earnings for partial lockdown itself, we may expect the more negative results in the future quarter results, right? Even though it is not the major factor, it is also one of the add-on for the market fall today. Final and the most important one for today's market fall is trade war tensions. Let's discuss what is trade war first. Every country will import the goods and export the goods. If the country is importing the goods, they will collect taxes from the other country. If the country is exporting the goods, they will pay taxes to the other country. If the country particularly increase the taxes for only one country and the other country also increase the import taxes of the first country, that is called trade war. Now, the two countries are US and China. If you see this data, in up to 2018, the exports from US to China is around $100 billion. But the imports are more than $500 billion. Then the President Trump was claiming that since there are more imports are from China, US citizens are not showing much interest in the US products. So he wants to increase the taxes for China imports. Since he wants to increase the taxes, China also want to increase the taxes for US imports. So the trade war happened between China and US. The trade war happened from 2018 to 2019 and they came to an agreement and they signed the first phase deal on January 2020. If you see this picture, these are the US tariffs for China imports and these are the China tariffs for US imports. If you see here, on May 2019, US increased the tax to 25% for $200 billion Chinese imports. And in the next month, June 2019, China increased 25% of taxes for $60 billion US imports. So markets reacted like this on those months. These are the scenarios when everything is in proper state. Just imagine now. Now there is corona and economy slowdown. If the trade war has started, we can't even imagine the consequences. That's the reason markets, the entire global markets has started falling down. So friends, like I always says, please think twice, thrice or even 10 times before investing because it's our hard earned money. That's it for today guys. Thank you so much for watching our video. If you like this video, please like, share and subscribe to our channel for more interesting videos. See you guys in the next video. Until then, stay safe, stay home. Good night.